Good day, traders. A request from a good friend of us how to trade in forex trading. So this is for a newbie for forex trading. Okay, now I will discuss first the basic terminologies. Okay, the lot sizes in forex trading, how it represents, how profit is made in forex trading, and lastly, what are the charges that we have to know while doing this forex trading. Now, in basic terminologies, we have this so-called pips. Pips meaning is points in percentage. 1 pip is equivalent to 100 points. So every pips movements in every 100 represents 100 points. When they say 50 pips, that means 500 points. So don't get confused in this. Now next is the spread. The spread is the distance between the bidding price and the asking price. So that in the middle is the spread. This is where the binary options are trading. Okay, now next is the support and resistance level, which everybody knows already. This is where the levels in the chart where we identify where the big stops, okay, where the prices stops at sitting, either it will go up or it will go down. So this is how the support and resistance. This is also EA, which is expert advisor. These are the robots. Many traders nowadays, including me, have a robot who assists me in my trading. I don't fully use robots, but it's only assist me in my trading. But some of them, they have designed an expert advisors in which it's totally the expert advisors will do the work for them. Okay, now we have this drag down DD. Basically, just to simplify, drag down is the exposure when you trade. Assume you have $100,000 and you trade $1,000 and it exposes around $10,000 against your 100,000. We call that is the drag down against your capital. Okay, lot sizes. Lot sizes is when you buy and sell, and there's this is the size of you want to risk during your trading. So there are some other things, but I will not discuss further now. It's just the basic thing. Okay, there are commitment of trades, there are market consolidations that they use, but I will discuss only this, which is usually we encountered in the MetaTrader 4 or MT4. Now next is in the chart. Now we look on the chart in the MetaTrader 4. We do trading in many kind of instruments. There is commodities, there is metals, there is cryptocurrencies. But I usually trade on foreign currencies. Okay, so foreign currencies like this. We have the Aussie USD, Australian dollar against US dollar. There is USD CHF, meaning the US dollar versus Swiss franc, UK pounds to USD, Euro USD, all this. Okay, now further in the chart, you can see the asking price, which is in the red, which represents the price where the sellers. If you notice, 77440 is also same here on the asking price, and the bidding price is here 77425, which is the same in the bidding price. Not the distance, like I said a while ago, the distance between this bidding price and asking price is spread. Sometimes it's widened, sometimes there is not even a single spread. Sometimes it's neck to neck on the trading. So that happens usually during volatility. Sometimes it spikes in the market during that trading time. It will happen. Now next is the spread. If you look at this price, if you subtract it, is 15 points, which is written there in the other in the indicator here on the side of the chart. Now, lot sizes. When you do the trading, there is so-called lot sizes. It's like the size of the trading that you want to risk. Okay, it depends on your risk appetite, but basically in the standard accounts, 0.01 represent $0.01. Okay. Now in every pip up and down, it represents 0.01. You have to multiply it. It will deduct to your, either deduct or add to your account. If it's in favor to you, it will add. If it's against the trend you are trading, it will be a deduction to your fund. So that's how you have to look for. Now notice in this chart, let's just assume you sell at this price level 92610 and it went down, it goes to your favor. The difference between the sell price level where you sold against the ask price, which is already down, the difference is like 243 points, okay, which is represents 0.024 cents dollars. So you are in profit on this situation. Okay, I'll give you an idea how it works, how you make profit. Assume you sell and the chart went down, you are in profit. If you sell and it went up, you're in loss. The same applies when you buy and it went up, you are in gain. But if you went down, it went down, you buy and it went down, you're at loss. Okay, as simple as that. Now let's proceed on the scenarios. Let's assume you sell at this price level and it went down. Okay, it went down. So the difference between 92610 and this 92367, which is 224 points, you have again all 24 cents dollars. However, if you sell and it went up, the difference between the bid price and your selling price will be your loss. Okay, so now that's how it works. Now there are some other scenarios which we have to take into account, that if you sell it at this price level and the asking price does not move, that's what we call the spread widens, you are at loss, because when you subtract the sale price level against the asking price still up, you are still at loss. However, if this went down, the asking price, then you are in profit. Sometimes the price level is on this level, the only difference is this, what only your profit. So this how it works. These are the very basic things that we have to understand when the spread widens, why I'm in loss, all this. Now let's proceed to the charges. Now in charges while trading, definitely there's many type of accounts. There's a standard, there is raw. Okay, it's all the same. Anyhow, at the end of the day, there's outright charges. Every trade that you do it in raw account, 01 lot, the broker charges you 0.07 dollars. Notice this, I have placed a sell of 02 and the charges is 0.14. They just multiplied. So that's how charges. Now there is swap. Swap is when you have a trading which you stayed for more than 24 hours. Either you gain interest or you pay interest to the broker. Okay, so this is how it works. So that is how the swap works. The definition is here, so you can go to check also in some other terminologies or some definitions. Now when you trade, what I've shown you above is just a basic flow, but when you trade and you are in gain, you are not in gain until you account this. You will not realize your profit until you have to pay this. So definitely, even if the chart is in favor with me, if this, I have to cover this in my profit before I realize my gains. Okay, so this is how you have to basic knowledge you have to know in forex trading. This is a very basic thing, very basic. Okay guys, I hope this helped to my friend who are in need to have a little more understanding on our forex trading. Thank you very much. Thank you very much.